Okay. All right. We're going to start recording. All right. Perfect. Okay, everyone. So, firstly, welcome. Thank you for joining this particular session. This virtual roundtable is being hosted by the United Africa Blockchain Association in collaboration with Cleanverse. So thank you very much for taking the time. I know it's very early for a lot of individuals. Hopefully everybody has had their coffee or their teas. I know tea is a big thing as well. And if not, feel free to step away at some point and get your coffees and get back into session. This session is about, or has been termed, about built-in trust. It's about navigating South Africa's new compliance era, understanding things like stablecoins, RWAs, and digital assets. And there's a very big team here, which actually makes me quite nervous in all fairness, because the caliber and the group of individuals that's in this room, runs some very big operations and is part of some very big movements in South Africa, globally, and in many ways managing this new wave in the fintech space. So thank you all for joining. Thank you all for participating. I see there's a few more guests that's still coming into the room. So as they rock up, we'll just add them to the sessions, and then we can take it from there. A few little rules from with regards to things like this. Preferably keep yourself on mute unless you want to participate in the conversation. That's just the standard thing. I know 2025, everybody had the on mute t-shirts going because everybody was shouting, put yourself on mute. So just make sure that you are on mute if you're not busy in conversation. The other part is that we'll more or less redirect a question to a particular individual. At the same time, if you feel that you'd like to contribute towards that particular question, or provide some insight at any particular moment in time, feel free to jump in. This isn't a controlled environment. This should be a fun conversational chat. If you have some strong opinions, we love strong opinions, drop them in. Let's have those chats. That's the whole point of these sessions, is to have some good conversations. So I think what I'll do is I'll just give a bit of a macro backdrop, provide some insight into some of the framing of what we're going to discuss. And then allow the Cleanverse guys to also just introduce themselves. They have partnered with us to showcase and have this conversation. And then we'll move into a range of good conversations and questions and take it from there. So I think the one thing I'll start off with is saying that, the capital flow deadline is around the corner. So we're a few days away with regards to that, with regards to the public comments being closed. For the window of the National Treasury Landmark Draft Capital Flow Management Regulations 2026 draft. It's the longest name ever. And with that in mind, this draft basically proposes a monumental shift on how crypto assets, stablecoins, and tokenized assets are handled under exchange control frameworks. And then you have on the other side a court ruling that says, on the 1st of June that took place, it explicitly declared Bitcoin as money and capital under the 1961 exchange control regulations, which directly contradicts the previous Pretoria High Court rulings. So there's a lot of urgency around what we understand, how we approach these things, understanding the definitions that relate to things like cross-border capital movements and distributed ledgers. And then you have the other side of things, which is quite an interesting conversation that happened at the Point Zero Forum in June 2026, where Cleanverse unveiled this programmed governance playbook and governance or GovOS environment, demonstrating a global shift away from retrospective reporting and audits towards a live, automated, and bank-verified on-chain compliance space. So those are very big different worlds that we need to break down and discuss and try and understand. And as we go through this agenda, we'll dive into a few questions that speaks to all these particular scenarios, and then try and understand and figure out how we can take the things forward in this very interesting space that we're in. I want to introduce Sandeep first into this conversation. So to set this foundation, we're going to bring in the co-host. His name is Sandeep. He's the Chief Growth Officer of Cleanverse. I'm going to just give a quick little breakdown. I'll leave the rest up to you, but it's a platform that is doing incredible work in bridging legacy banking standards with public block space and under the banner of clean money meeting clean hands. So I'd like to pass this on to you, and maybe you provide some insight into what Cleanverse is about, and why you've partnered with the team, and take it from there.
Um, just let me know if you can't hear me. Then I will just
We
adjust.
can.
Okay, great. So, a quick introduction first from my side. Firstly, thank you to all of you for making time for this roundtable event. And our as the co-host, our main goal and agenda is to drive this session into a more of a learning and insights. But at the same time, we wanted to use this opportunity to talk about the initiative and the the drive that we are pushing forward at Cleanverse, and what it could be something that of interest, something that may be top of mind for you, and we may be deep diving into some of those topics during this conversation. But I joined Cleanverse about since the time of inception, which was in 2025. So we came up with our thesis that there is this need in the industry as the digital asset space is expanding, stable coins, tokenized products, RWA assets, all of these as they're expanding into the adoption stage into the traditional finance space as well, rather than just from the decentralized finance space. Our thesis was that the governance, the oversight, the controls, and the underlying trust that would be very critical for any institution, any regulator, any kind of even enterprises and companies to adopt the digital assets. And with that thesis, we started building onto what does it take to bring the same level of standards that exist in the Web 2 world to the Web 3 world. So with that, I will share my screen, and let me know if you can see it clearly enough.
Yeah, it's just come through. Perfect.
Excellent. So, before joining Cleanverse, I have been operating in the fintech space and the stablecoin issuer space. So, in the fintech space, I have worked with organizations like MasterCard, Netflix, Pine Labs, and Booking.com. And in the stablecoin space, I was leading the APAC market for Paxos, which is a stablecoin issuer known for PaxG and PYUSD. Uh, Cleanverse was a logical extension of where I was seeing the business going. And that's where I came on board, joined Seri's team, and I wanted to take you through what we have conceptualized so far that we want to get you to understand. So, in very simple terms, we have kept it very easy. Is where clean money means clean hands, which essentially means that whenever illicit funds, provenance of the funds, these comes into the picture, the Trade 5 governance standards are handled through a way of reporting and through the way of processes and operational controls. The DeFi world doesn't usually exist in that space. And when that happens is where what the key aspects that are missing is the overall architecture that exists in that space for bringing an equivalent trade fi governance standards to the DeFi world, is where I see that there are a lot more questions that it started coming on institutions' mind. So the evolution that you would have seen is it used to be uh, our Web3 used to be wild wild west, where users would be punters going in just doing crypto trading. But with the evolution of stablecoins, then tokenizing of products like deposits and RWAs, the real world use cases started coming about. And when with that started coming, the question is how much of it is actually uh, verified assets, and it's coming through verified individuals. So the identity and the cleanliness of the asset became very critical for adoption. And this thesis came out of many conversations that we have had with many of our partners who started saying that I want to operate in this space, but I don't have the trust. I don't have the confidence that I will not get into trouble. To maybe I'm touching sanctioned persons' funds. Maybe the source of funds are illicit in nature. And when regulators started catching up, they started the need for an enforcement or a governance standard, and they started defining those standards. When they define those standards, they're like, how do we implement this? So there are these four aspects that we see. One is the identity, the second one is the assets, the third layer is, of course, governance of this, and fourth is how do you act, the enforcement aspect. So Cleanverse is built around this as the base layer. So in essence, we are a compliance native infrastructure and a rules layer for anyone to operate with confidence and trust in the digital asset ecosystem. And how we enable this compliance standards and governance standards is where programmability comes in. The programmability used to be at what used to call about the initial blockchain application on money, that you can program the money on how it moves. But we brought the same concept to the identity and the asset space, which means we verify the asset identity with the trade file level of standards. We verify the assets to ensure that it is coming from the right channels. We interlock them for anyone to be able to comply with how these assets are moving with which ownership. And that's where the travel rule compliance and the settlement aspects comes. So the on-chain governance is programmed instead of being reported or tracked through multiple tools and solutions. So that's where there are two key aspects that I wanted to again talk about here is who is it applicable for? It depends on where the verified assets originate from, right? So there are two ways the verified assets come about. One is when they are issued. That means it could be a stablecoin issuer. It could be a financial institution tokenizing their deposits. It could be an RWA issuer who is tokenizing their products. All of this, when they're issued, they are applied through a Cleanverse compliance protocol, which is the base rules layer that defines on how the policies are programmed and implemented for the transactions and movement of these issued assets. The second side, which may be applicable to many of the participants today, is on the who are dealing with existing stablecoins, especially regulated ones or the most popular ones like USDT and USDC. They also benefit by getting the interlocking capability that Cleanverse brings, where these assets could be deposited and could be built out from there. So that's where the application is also for existing flows as well as new issued assets. And with that, I will just move into the next stage, which is what we launched, and that's why Seri is in Zurich at Point Zero Forum, is how we have brought programmed governance into this solution for people to adopt. And with this launch, what we did was we talked about how we did the GovOS, which is the operating platform. The key difference is from being reactively reporting to proactively operating the governance standards. So I'll take a pause here and maybe open the floor rather than going into the details. And for some of the participants, I think I shared the playbook with you. And if Seri has any point of view to attach to this.
Warren, do you want to take it first, or if not, I'm just going to go on to the Cleanverse.
No, go for it. I was waiting for you. All good.
I think, Sandeep, thank you for the introduction, and then jumping straight into the Cleanverse story. So it is really what Cleanverse has stood up for, a little bit of a sharing since I'm right here at the Point Zero Forum, and we are in the right forum of also attendees on this roundtable. The conversation, I think, that we all have been in about how do we regulate stablecoins, how do we regulate the digital asset industry, I think there is a consensus amongst regulators or even the institutions that we have already moved on, right? Regulations are clearer. We've got standards already established. The very next phase right now, to be very pragmatic, is how do we actually implement the regulations such that we can then also move on to enforcement. So this is a call, I think, on both ends. One, obviously, the regulators seeing still no urgency, right? Because they feel that there is time, we still need very concrete use cases. But yet on the other side of the business, where the industry is really running, stablecoin issuing, wanting to do more, they feel that there's a lack of being able to understand what those conditions are. I think we all know, like, where I am cited right now, there is a MiCA deadline, right? 30th of June. So I could sense a lot of anxiety in the room, even though people were there sitting. A lot of questions, right? Because regulations are regulations. They are not sure fundamentally how to meet those regulations because they are new. And therefore, this conversation about programmed compliance, while it's new, I do sense that it will come up to be an important narrative going forward, whether is it starting from right here in our roundtable and then moving on. I do expect this to be a upcoming conversation and of interest as well, because of the clarity that's required, not so much from the how, but more in terms of, can you give me something that is more precise and concise from a regulator perspective, to also have the assurance that whatever I have on policy can be executed, and from the side of the issuers, from the side of the licensed institutions, to also have clarity and also the peace of mind that when I invest in this type of a solution, I am not going to be in breach. So Cleanverse, I think from a timing perspective, that's where we are very relevant. This playbook that we have come up with, and I invite everybody to also maybe take some time to peruse it. The Monetary Authority of Singapore, MAS, some people call it, has also issued a similar document just 2 days ago as well. Also issued it at the 0.0 forum. It is themed on program compliance. So I do maybe just want to stop a little bit here so that we can, of course, still go on as we move along the roundtable to invite more questions and more robust discussions. As you now move into the discussions about regulations, think about how we actually can think of programming that policy, number one, at an interoperable level. So I think what Sandeep has introduced to everyone, Cleanverse has not come up with our own standard. We are not a blockchain. We are not a wallet. We are in fact just a rules layer that wraps itself or embeds itself into assets. So when I say embeds itself into assets, that's when Sandeep mentioned we are talking about the new flows. When institutions are thinking about tokenizing deposits, they're thinking about issuing RWA, that's where we say the start point could be putting the Cleanverse policy layer into the smart contracts. Now, when I say it is a wrapping layer, that's where I'm making a reference to then what Sandeep mentioned, the native coins or the native tokens that are already in circulation. There is no way that we can rewrite those smart contracts. But what we are proposing, however, is to use Cleanverse as a layer, as a policy layer that wraps the native tokens. So I think maybe of interest, I will just share this as an example. How do we talk about wrapping? So we are in discussions with a certain regulator who is keen, right, to look at how they can allow the use of USDT in the market. However, they want to be cautious, right? Because they need to protect their merchants, they need to protect their consumers. So they wanted a view of how they can actually have those tokens come in from verified sources, from verified identity. And that's where Cleanverse starts to become relevant. And that's where this applies as what I call a wrapped policy and not so much an embedded policy. So I think we can go into deeper discussions on how we can utilize Cleanverse, but I think right now I will also stop here, not to have too much on Cleanverse. I think it's going to be too overwhelming. But I think as we go along, what Sandeep and I can do is to chip in, right, and chime in and see how we can reiterate or reinforce how Cleanverse actually helps to plug the gap on what I term as the implementation gap that we're seated on right now.
Yeah, I think that's fantastic. I also just want to, I think you touched on a point there regarding the USSD side of things. So maybe this is a good place to actually have the Katani Pay side of the world in this discussion. So I think I'll ask and I'll pass this on to Menzi. If you are around, you can maybe do a slight little intro of yourself. Then we can take the question from there. But I mean, you guys obviously do incredible work bringing digital finance or digital assets to phones using USSD. But when the regulations are this strict, And you've got all these different things and regarding identity verification, AML, and everything else in between that you need to consider. How do you manage compliance with such lightweight technology, and especially for individuals that are unbanked? Or how do you consider those scenarios, and how do you consider these regulations that are coming in? Is it complicated, and is it becoming problematic for your user base?
Thank you for that, Warren. Good morning, everyone. Again, my name is Menzi, and I am the VP of Trading Desk at Kotani Pay. So that question is very important, Warren, in the sense that it's right at the heart of FATF grade standards versus financial inclusion itself. So that is the journey of how Kotani Pay started. The use of USSD to disseminate funds into the unbanked, primarily for the UNICEF Venture Fund, and how we effectively dealt with the compliance bit of the AML checks is through the fact that users on the mobile money wallet are already KYC'd by the highly regulated telecoms mobile operators in East Africa. So we were acting as a middleware company, connecting that end user who would have needed to cash out from a USDT into a Kenya shilling mobile money wallet. Now, of course, that feature phone doesn't have a selfie, so that user is not able to do liveness checks or confirm that they're the very person that is linked to that identity. But however, like I was saying, the reliance model on MNOs conducting their own verified identity of the owners of those wallets is how we effectively deal with that bit. Of course, in the context of South Africa, the FIC as well as the FSCA apply a risk-based approach. So each market is treated according to what the regulation is. Thank you.
Yeah, I think that's a very, very good point. I think when I listen to all these different insights and the way brands are or projects are busy trying to resolve these regulatory issues, I always think of I always wonder, I should rather say, are you trying to resolve it as a requirement because your business needs it and it is important that you do this, or are you considering the user at the end that's of the pipeline that's actually using your products and considering that particular individual and how complicated onboarding might become throughout all these particular phases? And I always wonder, what's your thoughts from a business and perspective in that space? How far down the line are you considering the user, or is that top of mind? I think I'll leave that as an open-ended question for anybody that wants to maybe dive in there.
Yeah. So the end user is definitely front of mind because in South Africa we are an accountable institution. Under the FASE Act, the preamble of that regulation is putting the customer first and ensuring that the product that you're offering is suitable for that end user. And so the approach that we take is governed by the risk management compliance program, which all the CAS in the panel will know that that's your Bible. How do you onboard? To what extent do you collect information? What is reportable to the regulators? All in an effort to ensure that the end user who's using your product is considered and is protected from dubious actors, if I can call it that.
Yeah. Sorry, Menzi, if I don't mind, I also just chime in at this point. So you got it really right in terms of, because you are licensed as an institution and you hold yourself to the highest regard when it comes to KYC, when it comes to protecting the consumer rights. So on Cleanverse, we actually have this big part about identity. So I just want to take this time to also therefore now reinforce what do we mean by verified identity. So we do not perform KYC on Cleanverse, but what we do is we actually provide a attestation, what I call an attestation. I don't want to call it service, but it is an attestation. So we are of the belief and of the very strong we are cognizant of the fact as individuals or as entities, if we are able to show a proof that we are today holding a bank credential, be it a bank account or a card account or even a wallet account or a mobile wallet account from a licensed institution, it means that I or the entity has actually passed a highest order of KYC or KYB. So we are in fact bringing that back onto the Web3 or the blockchain infrastructure as the basis of identity. And this immediately makes that identity therefore globally interoperable and globally understood. Because if today, if I were to transact with you with a bank account and the money went to you through SWIFT, you've got the assurance and the credibility that someone somewhere along the way owns that transaction as well as owns that identity. So this is what we have brought in as therefore the intrinsic meaning of verified identity. And this closes a lot of the conversations when they keep asking, for example, what is that standard of identity today that can connect people or connect organizations in blockchain? Cleanverse is saying you do not need to recreate that standard. Because like Menzi yourself, you spend so much time, ensuring that your customers or ensuring that your boarded institutions meet the requirements. So we are not going to redo that work. We are going to bring that same credibility and also recognizing that in blockchain, accountability has shifted. Institutions do not exist anymore. So I think Menzi, like yourself, after all the good work that you've done, this doesn't get shown in Web3 because you just cannot get into that transfer itself. However, it is your customers that will be performing those transactions directly. So what we have done right now is, yes, there's this part of what I term as we do create an identity token, which exists as a form of what I call a soulbound token that gets attached or gets embedded within the wallet credential in Web3. So that becomes a first stage of engagement, be it whether you are a user or whether you are a entity. And that first point of attestation, it could come through directly from a licensed entity who is going to participate directly on Cleanverse. Or you and I, as users, we can volunteer to also get an attestation on our wallet credential. And that's by way of us, therefore, turning around or reversing the way that we're looking at KYC. We are getting the users themselves to show us that proof, and we will provide the attestation as an infrastructure. So that as a baseline, what's going to happen is on Cleanverse, when we say verified identity, we are bringing back that bank trust, but by way of moving it backwards, only because accountability has come forward through the users. So I'm going to leave that part so that we all, at least at this point, understand that when Cleanverse brings in that one part of the equation, we are talking about bank verified identity as a baseline. So we are bringing to par, right? We're bringing a certain level of parity between TradFi as well as then DeFi.
That's great. All right, so I think we'll move on to Noble. I know I see you on the group as well, which is great to have you. This kind of leans into that the promise of stablecoins is making remittance fast and cheap statement. But if you're trying to meet that FIC compliance rules, it costs a lot of money. So maybe just a little bit of insight into how you are managing and staying compliant, without driving these massive transaction fees up and destroying the costs of the consumer at the end of the day.
Yeah, Warren. Thank you so much for that question. It actually really hits home because when we started Remit last year, we had a huge user adoption before we had built that compliance layer, and we just had to pump the brakes a little bit to ensure that we are fully compliant. But what we found now, for the better half of this year, while building this compliance layer, we found that traditionally we've treated compliance as its own cost center, right? Which then drives up costs very high, especially if you licensing through a third party and you have a third party partner. It becomes a very expensive transaction, and most startups are inclined to push the cost onto the customer. All right. But at Remittees, we realized that we should treat compliance as something that's built into the payment flow, because not every transaction has the same risk weight as the next transaction. For example, if a business is transacting $100,000 per month, it's not the same as a domestic worker transacting $200 per month, right? So with that in mind, we started building a transaction flow that incorporates automated KYC, AML, and creates an audit trail for our compliance partner so that we can always follow it and continue with it. And with that, we've ensured that an ordinary user doesn't carry the same burden as a high value user per se. And that has really reduced our costs significantly, and it has helped a lot of our customers to continue transacting while reducing their costs at the most. Yeah, hope I covered it very well.
You did. That makes great sense as well, and I'm glad to see that all those considerations are there. I see a hand has been raised. I can't see who it is. Whoever it is, do you want to jump in?
Sandeep. No, well, I think that's a very interesting point you mentioned, how the compliance cost comes into this remittance flows. My one question or a follow-up point on that was, how do you manage that or as you grow? Because I know Remittees is growing, but when you grow, how do you manage that? Is it through optimizing your compliance cost center costs, or is it through using tools or more automated tools? Is there any insight?
So initially, when we started building the compliance layer, we had separated it, right? We had separated because we are a startup. We don't have the funds to be fully licensed ourselves, right? And with that in mind, we had passed on the cost because we were paying a retainer to our compliance officer, right? But with that now, we've had to revise that flow so that every customer is automatically KYC'd before they even start the transaction, right? So by creating profiles, every customer has a risk profile, right? By managing that risk profile, you can then manage the cost that you pass on to that user, and that goes with behavior over time. How regular does this customer transacts? What are the amounts they transact? All these costs, all these transaction fees, all these transaction values matter in terms of the risk profile. Where they come from also matters, because someone transacting from Zimbabwe to South Africa is not the same as someone transacting from, let's say, Botswana to South Africa. It's different landscapes, it's different rules, and it's different profiles for the actual countries themselves. So with that built into the model, it then helps us to grade every single customer, and it's a very scalable. Well, we'll be seeing that if it's a very scalable solution or not, but that's how we built it so far.
I think without a doubt it will be scalable. You're being very generous over there and very, very nice. But I've seen that tech. It's running very smooth. I think I'll jump into Chanel from your side there. I think this speaks to one of the questions that we would love to get some insight from you, and that is from the yellow card side. You operate across many of the African jurisdictions. So South Africa is, of course, moving extremely fast. Its own capital flow proposals are there. Hopefully, no one used AI to write that. And during this particular phases, you've had to maintain your compliance for your tech infrastructure across all these different borders and countries. So how do you manage that? How do you look after that? How do you consider all the exchange controls and the reporting timelines? It sounds like a nightmare, in all fairness, from my perspective.
Well, thanks, Warren, and thanks for having me. I think the honest answer here is discipline. Built on top of that would be modular architecture. So there should be an explicit acceptance that single will never mean identical across jurisdictions. And I'll unpack that now. So what I mean is, when we run a common compliance core with these jurisdiction-specific layers on top, the core handles the identity, custody, treasury, transaction monitoring, audit logging. The configuration layer encodes each jurisdiction's rules. So you've got South Africa's FIC and travel rule obligations. We've got to consider Nigeria's SEC framework, Kenya's dual regulator VASP regime. So when a transaction routes through, it picks up the rule sets of both the originating and the beneficiary jurisdictions, and the architecture applies the strictest applicable combination. But I also want to touch on policy as code. So each jurisdiction's rules live in the rule engine, where we index updates without touching the underlying platform. And I think that's critical. And that matters expressly in this present time, where we find we're sitting with the absence of legal clarity with the two court cases going on. One is saying it's declaring crypto as money and capital, the other is not. So we're watching this position closely and we're engaging the process actively. And our architecture is built to absorb whichever way this position forms, without requiring an entire rebuild. The other third point I want to touch on is the long regulations. I'll just cut it short and say the draft regulations. It closes for comment in 4 days. So what Yellow Card's done is we are a co-signatory to a joint industry submission together with Valor and Luno that have led the submission. And the industry, we as the industry, supports the 4 positions. So that's your positive bias, meaning the regulator defaults to allowing the activity unless there's a specific reason not to. That a reporting-led and fewer permissions position, where we transact freely and we report what we did, employing sort of like the travel rule methodology. And the last one would be that focus on high-risk cross-border flows, which means the regulator is thinking about this in a risk-based approach way and not treating all activity uniformly, which we welcome. Now, the industry supports this direction because that is how digital money in effect actually operates. But our concern is that the drafted text does not deliver it. So we're taking a position that it would do the opposite of that goal because of how customers and operators react to friction. So what will happen is these customers and operators, they would revert to the channels where the standards drift to the lowest common denominator. So that means the lack of supervisory oversight there just increases. And the last point I want to touch on is programmable compliance, which is something I think Cleanverse was talking about. So the future of cross-border compliance is not 54 separate reports filed monthly. It's actually real-time structured compliance data flowing from Rails themselves to whoever needs it, like the regulators. So our architecture is built to be a participant in that model and not resist it. So the essence, Warren, and the forum is that the principle here is that a single compliant infrastructure across the borders does not mean one rule set. It just means that the common architecture that absorbs this jurisdictional difference without breaking a policy as code layer that adapts as your courts and your regulators move. So perfect harmonization, no, we are years away from that, but operational interoperability is what I'm referring to. So that's achievable, I'd say 12 to 18 months if the industry and regulators and the infrastructure providers like Cleanverse are aligned to this common direction. Thank you.
Yeah, that's a great answer. I would never put dates and numbers to anything in this space, but I appreciate how positive you are with those timeframes. But thank you very much for that. I think this leads in perfectly into Luna and Krista's side of the world. I think Krista, I mean, just Luna-wise, just sideline. I mean, when I first actually dived into a proper exchange platform back in the day, Luna was the first one that I dived into, and oddly enough, I have not moved. So that is not you didn't pay me for that, but what I can comfortably say is you've been around for forever. but you've also not just stayed around and done nothing. Product wise, you have grown with your audiences, which is great to see. So I mean, you've obviously been at the center of South Africa's traditional or standard regulatory framework. You've been here for forever, so you understand how this works, and you've helped build it. I would say. With the FSCA inspections now officially active, and the actual operation reality to meet the taxing requirements and the compliance rules around that, there's a lot going on, basically. So if you consider all these things that are regulatory requirements that are coming into play for your user, how do you build your tools to make sure that the users don't experience bottlenecks or frustrations through all these processes?
It's a difficult question because with regulatory oversight, bottlenecks and frustration from a consumer point of view are going to be there, right? It is the way that the industry has evolved. Maybe if I can just take a little bit of a step back, and thanks for the positive nod towards Luno. I mean, fun fact, we were established in 2013, which makes us one of the oldest surviving crypto exchanges globally, much older than some of the other players in the market. And apart from South Africa, we're also the biggest regulated crypto exchange in Malaysia. With cumbersome regulatory oversight, also there's a significant cost involved, and this has obviously led us to pivot our strategy in terms of our global footprint. We were operating in the US, in the EU, UK, Singapore, and because of very, very cumbersome regulations, making it less cost effective from a consumer point of view, we've decided to exit some of those markets, focusing more on the emerging markets such as Malaysia and South Africa, Nigeria, Kenya, Indonesia. How do we prevent bottlenecks? I think that's by integrating with technology partners that solve for these problems. I mean, we are a crypto exchange and we bring crypto and also now tokenized stocks and other investment products to consumers that are obviously interested in this space, but we are by no means a compliance, anti-money laundering service provider, right? So we rely quite heavily on integrating with partners that facilitate that with us, for us. Having said that, because we were operating in so many markets globally, we've learned quite a lot along the way with quite strict and cumbersome regulatory oversight. So we've gotten it down to a point where we know where to minimize those bottlenecks and where to minimize any customer pain points. I think very interesting at this point, especially where the industry is going, especially with the rise of stablecoins, and we see the global adoption of stablecoin and stablecoin volume. We see that shift from a broader retail market where we see the industry changing from moving away from a speculative nature, looking on where to cash in on a massive, 200-300% growth, back in the heyday, to more to an institutional side where we're solving for institutional challenges. And with that comes a different set of challenges. And how do we onboard our institutional clients? How do we facilitate that growth? And how do we, Luno, who is previously largely a retail player, how do we then pivot into that institutional space and not necessarily treating our institutional clients as retail clients? It is an interesting journey. We don't have all the answers yet. We are on that journey, but at the end of the day, we are continuously pivoting and reinventing the way we handle our processes. With obviously the pending regulations and the draft capital management deadline, coming up, as you've mentioned, we've been very heavily involved in setting up South Africa's regulation, working closely with regulators. We've been part of the working groups from back in 2015, 2016. And to be honest, we were also quite shocked with the way that this draft regulations were published, the hasteness of it. And as Chanel has also mentioned, we are working quite vigorously in our feedback with a joint industry submission that we're working on, also our own submission that takes on quite firm points, especially on the reporting side of things and how that is just going to completely inundate the regulator with unnecessary data that is going to make their jobs even more difficult. So it's a little bit of a long-winded answer there, but I've hoped I've given some attention to your points.
Yeah, you have. That makes perfect sense, and yeah, completely agree on pretty much all of that. Thanks for that. I want to just drop a question over to Vudi. I see you're also in the group there, and if you thought I was forgetting about you, not the case. I remembered. So I want to basically just ask this because it kind of leans into the other side of of users. And that is that Bitfest has been a major force on the foreign exchange side of things, but also with regards to corporate trade. So maybe just provide a little bit of insight into how do you manage and how do you look after things like authorized dealers that need to prepare for things like digital assets, with all the financial surveillance guidelines that's around. How are you managing that side of the world?
Thank you Thank you very much for the opportunity. But we've taken a decision as the bank to not deal with Cat 2s that essentially deal with crypto and then financial assets. So being a tier 2 bank, we don't necessarily have the capacity to really monitor transactions and all of that. So we've decided to essentially step away from all anything that has to do with digital assets or crypto. But with recent sort of like with I don't know if you know what's going on with the bank. There's a lot of change that's due in the near future. That sort of opened our enthusiasm to look at parts of transacting that we had previously dismissed. So that's where we are right now, in trying to understand where everything could link in and loop in together, and how much would be required from us to get back in the space again, and then look at your crypto and all other associated assets.
That's a good way of not answering the question. I appreciate that. I'm just kidding with you there. I think what I will say is, I mean, I'm going to throw another question your way, Vudi, just before you disappear. But I mean, I probably put that statement in the category of you have legacy systems of sorts that you that's up and running, that you're extremely happy with, and that is doing extremely well in its current form. But when you think about digital assets and tokens, just generally, do you think that is something that is going to mature? Just personally from your side, do you think it's something that will find its feet to the point where tier 2 banks and all the others that are in these legacy system worlds and very happily there, that they would have to kind of lean in and think about the next phase?
From a personal point of view, definitely. And I think that sort of broader sort of view from up and the sort of bank-wide view is that eventually we all have to adapt to the direction that the world is going. And you can see, for instance, looking at Africa, what digital assets do for transacting in Africa. If we're looking to grow, if you're looking to expand in any direction, you will definitely have to sort of play in that space and try and solution in that space, or partner up with entities that you can enable to thrive in that space.
Yeah, that's a good answer. Anybody else have any thoughts on that? Just from if you think about legacy technology right now and tools in the financial space, obviously I presume because everybody lives in this new financial almost startup phased world where you need to find good partners and good opportunities to work with partners to build your technology, to build your considerations on how you're approaching your users and all those good things. But how far away do you think those requirements would be where legacy tools needs to adapt very quickly? Are we far away? from this new digital banking phase, or still quite a while off?
Okay, I'm going to give my view only because I think in Singapore we have been engaged with tier 1 banks, tier 2 banks, as well as in Hong Kong. Like what Woody mentioned, I don't think the banks has a choice anymore. They must interact. But the extent to which they interact will depend a lot also on the bank's what I call use case and utility. I think where Vidu sits, where the bank has to touch a lot of foreign exchange, FX, I think it is almost a no choice, I feel, right? Whether is it starting with settlement or whether is it starting with corporate flows, that somehow, somewhere, they do need to manage the risk that comes with it. So I think how the banks are approaching this, the way I look at it, they are not going to invest in another compliance team, right, to understand digital asset to the depths of it. It will come through partnerships. Like Chanel, you have a right solution in place. It needs to speak to how traditional finance has been operating, right? Go back to the I guess the depth of the way they manage compliance, so that compliance has that assurance that even though it is a different technology, it is a different infrastructure, the reports, the data, the controls that I need, right, will continue to carry through without them having to be totally vested in having to manage it. And we know that in blockchain, that comes the discussions on smart contracts, comes the ability to code, like what Shana mentioned, policy on code. I think these are the assurances that the banks need to be open to know that there is technology today, and I do need to look at compliance in a new way. Then I feel that it's going to be a lighter touch when it goes into DeFi. If they seek, which some banks, which I do look at some banks, they do want to, they sit in front of different suppliers, vendors, every day they're doing the evaluation. I don't see them moving, right? And it becomes even more difficult. I think Chanel wanted to add something.
Yes. Thanks for that. Yeah, I think my recommendation would be to move from paper to pilot. Especially, okay, I'm giving this context now in the conversation that we're having now about banks. What I would recommend for banks is to start maybe with tokenizing one of your deposit products, or partner with a licensed operator on a single corridor. Because what we can expose you to by doing that, because tokenized deposits, let's be fair, that's the bridge for banks, right? And we can expose our structured compliance data. So your travel rule fields, capital flow tags, all of those things, we can share all of that via API. So the bank's compliance stack consumes the data and applies then their own controls over that.
That's a great response. Yeah, completely aligned on that. I think maybe, Sandeep, we dive into a few of these other points that's big and bold from the Cleanverse side, just as we get to a point of wrapping up. I mean, if you think about Cleanverse advocates for this programmed governance side of things. Instead of looking at past transaction reports to find compliance issues after they happen, they look at building the policy controls. So how, in your opinion, how does shifting from post audits into real-time checks actually help centralized banks and treasuries? I'll add a little bit of an extra caveat to that. Is it not a odd kind of an adjustment from what blockchain and crypto was back in the day, because you are providing so much insight and detail about yourself through that phase right at the beginning?
Yeah, I think that is the inflection point which we are at right now. The key difference is that, as Woody pointed out, and Chanel and Seri also mentioned, the inflection point is for regulators, banks which actually operate in this space, but many of them are not ready to jump into because they do not understand it. There is an interface with the blockchain world which the traditional institutions need to navigate. And that interface becomes challenging is because, firstly, there's a lack of understanding. And secondly is, even if there is understanding, the surface areas or the vectors that can be basically the risk vectors and the risk surface areas are the ones which many of the traditional institutions have not thought through due to lack of understanding, or like they may not really know how to attend to that. And that's where when we analyzed and came up with this approach, is one is we take the equivalent approach of how currently these controls and risk vectors are managed. Is you slow down the movement of money, you hold it, you report it, and only then you release it. But when you move into the blockchain world, um, the things don't stay at one place, they move, which is where the atomic settlements are coming, which is where the money moves almost instantly. The settlement layer doesn't happen after the fact. So the key, one good example which many people might have heard of, is the hack of drift protocol a few months ago, where Circle, as the issuer of USDC, was able to watch the money jump through multiple accounts and under Circle, laundered through that, but they can't act on it is because they do not know enough whether it is actually illicit or not. It only became after the fact. And even though they could trace it. So blockchain brings that traceability, the immediate money movement that happens, the settlement that happens. But then if you apply the equivalent controls, it cannot be in a reporting manner. It could be at the onset of the flow. That means a policy level. So that programmability aspect didn't exist in the Web 2 world. The programmability aspect, blockchain and Web3 got it for the money side. But then when you apply that to the compliance rules and the governance, that is where the real killer use case comes, when we say, oh, we can actually program it by policy so that even before the initiation of the transaction flows through, it is controlled or blocked. So that is where the application of operational programmability rather than reporting side of compliance requirements are there, and that's where we have built our like the interface layer and the rules layer for these traditional players.
Yeah, so you mentioned the traditional players there, and what about the DeFi world? If you're thinking about those wallets that no one knows who they are and where the money's going to, and what happens right after that, because everything's so automated. I mean, I know we haven't even tapped into the conversation of AI and AI agents that's currently in play, but how do we? I'll open this up to everybody, but if anybody has any thoughts on this, with all these AI bots and agents running autonomously, looking after money, distributing money across different programmed requirements and needs. How do you manage money, and how do you track money that's going to wallets that you just have no insight or oversight into?
So I'm quite excited about this topic, so I'll go first. So by the time now I can let others formulate their thoughts on this. What I find exciting, see, there are two worlds that used to operate separately, as I think Christo was pointing out, right? That there was these retail guys or who are very focused on the trading side. The institutions used to look at it at arm's length distance. So the traditional institutions are adopting the Web3 products and the instruments from there. Similarly, the DeFi world, which like the decentralized finance world, also want to converge towards the standards of the traditional world. So what I mean by that is, you look at MetaMask, for example. It is the largest self-custodial wallet in the world, but they have launching their own stablecoins. They are launching their own card to spend the holdings in the stablecoins on the MasterCard Visa networks. So the thing is, they are moving towards this side. They used to be only always on the DeFi world. So when you attach the financial services and the instruments that have been developed through over the years to the DeFi user base, you will need to bring in the identity layer. You will need to bring the verification layer. And the similar aspect goes to the agentic payments and AI agents who would operate more autonomously, But if they do not have an interlocked identity to the source of funds, which is the assets also interlocked to a verified owner of that agent, then you would be struggling to actually authorize or process those transactions successfully. So this is where our thesis, or why I'm so excited about this, is in order to make it mainstream and make it as seamless as how digital payments have become in the traditional world. We need this programmability to the identity and the assets verification.
That's great. Anybody else have any comments on that one? Otherwise, Sandeep's going to talk for the next 3 hours on this topic. All right. I think that's brilliant. I think we've pretty much wrapped up all the questions. I want to open it up to anybody. Does anybody have any other thoughts or any other questions that comes to mind based on these conversations that we've been having?
I do have one comment for, I think there were a couple of participants which we have not heard from. So I think it was Shal and Abram. Is there any thoughts that they may have? I think Shal is from Zine.
Shal, I didn't even see you there. Are you from Zine?
Yes, I'm from Zine.
Well, Shal, then we definitely want to hear from you. How are you doing?
Yeah, look, it's a very tricky landscape to navigate. I think what's come out of the conversation so far is the importance of that kind of segmentation across who you're trying to serve and who you're building for, and how that fits into whatever compliance framework globally. I think the current updates it seems like a bit of a one-size-fits-all approach. It's got a big paintbrush that cuts across everyone, with the expectation that a commensurate amount of reporting happens, and as you guys also mentioned, into what ultimately would be legacy institutions, which we all know would take years to actually get any of that in a more real-time type format, in a way of which we used to, operating trades on our side, be it for a consumer, be it for a business on our OTC desk, or be it as an infrastructure client and the likes. So yeah, I think we've definitely, similar to Chanel's point, baked it into, you kind of forced to self-regulate based on the very lean information that we had at the point of the founding of Zine. So a lot of, 6 months or so, it's a refactoring exercise just about as the things update or as new court rulings come about. So we have kind of baked it into our service architecture such that you have these eligibility checks, a kind of business passport, customer passport in our world as far as what they're allowed to do. We also trying to service the typically financially excluded on the consumer side. So, how do you do that effectively with low volume transactions that wouldn't be able to go via the TradFi world? Purely because of costs, to lower the cost barrier whilst also lowering the identity barrier somewhat, right, within your risk environment, but that is inherited ultimately from whichever territories you are operating in. So yes, it all is very tricky to navigate, and to stay true to our vision has become also, layering on costs, which ultimately are acquisition costs, trying to maximize the lifetime value of a customer who's literally working in South Africa, for example, to send money home to support their families. There's only so far that you can obviously offload all those costs, and I think there needs to be in saying that, there's also the recent immigration controls that have also kicked on for South Africa specifically. So it's a two-sided fight that we end up fighting. But yeah, as far as we have a kind of say in the room, hopefully we can help influence the legislation to a certain degree. But ultimately we have to adapt to survive. And the core of that is building any of our monitoring, any of our limit controls and the like into the service as nuanced as possible, and making sure that we're ticking the right boxes, making sure we are compliant and reporting along the way. But it is certainly a challenge to do, especially if we have such a vast kind of audience and segment that we would be typically serving. It's my closing thoughts.
Yeah, that's a good. I mean, yeah. Firstly, thank you for that. That's you pretty much hit the nail on the head there. I think there's so many different types of regulations and considerations that you need to bake and build into your different platforms, because the audience in the financial space is very vast and different, and their needs are very different at the same time. So many different considerations that you need to have so that you build smartly, I would say, and not end up adding the costs or pushing the costs onto your users by doing a bad job of that, if I put that in layman's terms. So yeah, anybody else have any other thoughts they would like to bring to the table? Sandeep, anybody else on the team?
I'm just going to add, right, to your point, exactly to your point, Warren. Like when I first started, I did speak about why policy or program governance is going to work a lot more for companies like today. We are all hearing, I want clarity. I want to make sure that whatever I'm investing in, right, works. And the challenge today is because different jurisdictions are coming out with different policies that are interpreted differently. So I think that's why the power of program governance, or rather the advantage of program governance when it does come to bear, is going to, number one, reduce costs. And also from a regulator side, like what Luno mentioned, while the regulator is going to cite a lot of regulations, they're going to want to see a lot of reports. It will be overwhelming, right? How do they even read those reports? Because then different providers are going to come in with different formats of those reports. Now, which one is going to be a standard? So I think I just wanted to maybe take this time just to reinforce a little bit about when Cleanverse provides that layer. It is what I call a network of different kind of utility. The only basic that we bring in is the fact of that interpretation of identity, and it all starts there, because it all starts with that identity token as, if I need to put it that way, as a standard. As to what goes in there, it is basically what we have brought in from TradFi. But with that start point, this token, it is not static, it is dynamic. And what I mean by it being dynamic, it just means that even with that first bank verification that could come through, let's say even if it's a South African bank, they have given me that attestation. They have proven that I own a bank account in Africa. Now, it only starts there. Because if tomorrow, me being the same user, I need to interact with a MiCA-regulated asset, where the requirement on that front is to show that I have a bank account, let's say in Europe, for me to interact with that particular asset that's regulated out of MiCA, it is on me as the user to be able to enhance that same identity token to show my bank identity accordingly. And then when that attestation is done, my same identity token is then enhanced or upgraded to reflect my identity accordingly, so that the asset on the other side will be able to interact with me safely and according to the policy that's set within the asset itself. Which is why, from a Cleanverse perspective, we are very keen and we are very earnest in having to do this roadshow of evangelism, right? Touching the different regulators, only for them to know that there's this possibility to look at policy in this manner, where you will put yourself into a space where we have ring-fenced, again, the bank-verified identities and the bank-verified entities within this space. Now, whatever comes on top of it becomes, therefore, regulatory specific, jurisdiction specific. So I think this is where we wanted to do that level set. Whether you are a bank, whether you are a PSP, whether you're an exchange, it is fragmented. We can't remove the fragmentalization. But if we can just bring back that one understanding of what identity stands for, I think that at parity will help at least diffuse a lot of the confusion on this end, right? Because it is a standard that all of us already understand. When you're bank verified, it means that, okay, you're credible. And I don't need to ask further what that comes from, because you're part of a banking network or part of a regulated network. And then thereon, if you're talking about, let's say in South Africa, there are new rules coming in, then start from that smart contract, where we will embed that policy, right, to say that today there are jurisdiction controls, or if it's a domestic settlement coin, those requirements gets onto the smart contract as a start. And then how do you actually exercise that? It comes into that identity token to then look for the eligibility, because that's where we are talking about how you, as whether you're just processing payments or whether you are going to issue a new asset, that becomes a start point and you're in full control, right? Today, Cleanverse doesn't touch any part of the flows. We only serve to come through with a protocol. So we call it the Cleanverse Compliance Protocol, or CCP for short, where we have sort of interpreted or given you an interpretation of how to put this policy into the smart contract, so that when it moves, you're going to be part of a network of bank verified individuals. And then that's where your start point comes. And then you can start to change the rules as it goes along. Like I really like what Chanel mentioned. It is what it is. And I feel that that's going to be the future. When policy changes, we change that code without having to touch the asset. Because when we change that code, it will impact how the asset moves thereon in real time. So if money is going to move in real time, governance do need to move in real time. It cannot sit outside, because that is actually a big friction point. And that's what we are terming the implementation gap. Now, if this is not fixed, we're going to do a lot of catching up, and it will cause a lot of constraint or stress, right? Even on the regulators front, as well as all of us on the call, because they're going to have to scramble and catch up. And I don't think that catch up is going to be a pretty sight for a lot of us.
Yeah, that's a great point. I think what's clear as well, I'll just add, is that there are many different systems, many different approaches that everybody has taken, but everybody wants the same thing and have the same goals at the end of the day. So it's about understanding how to get in front of the right individuals to have these conversations, and then how to make sure that your protocols or your suggested approaches basically is a one size fits all protocol that supports all these different types of businesses and brands. Because I guess that's the missing gap right now. Everybody has their way of doing things. Regulation is completely crazy and extremely all over the place, and many different ways to interpret those particular approaches. And then you need to have a way to implement. So lots of interesting points from this. But I think we can call. Oh, we have a hand up. Noble, sorry, I didn't see your hand there. Jump in, my friend. I will quiet down.
No problem. I just wanted to add one more thing, right? I think, and I stand corrected on the statement, right? I think Africa is not shy of innovation, ideas, builders, entrepreneurs, all of that, right? But I strongly do believe that regulation is a a graveyard for startups, and that's entirely because it's just kind of gatekept. It's kind of very expensive for normal startups to really try their product and go to market quickly. And what I'd like to see, this is a part where I stand corrected, is more sandboxing. You know, we all have a common goal. The big players, Yellow Card, Luno, Val, everybody, Cleanverse, right? We all have the same goal to make sure that Africa fully participates in the world economy, right? But without the proper infrastructures, we will see more startups dying in that space before they go to market properly. And I think that's a conversation that needs to be opened to allow as many startups as possible, as many ideas, to push their products to market in a sandbox environment where we can really try these innovations without dying out before they even go to market properly. So yeah, I just wanted to leave that as food for thought, especially for the big players that we're looking up to help many startups coming up so that they can build.
Very much on the same page. Completely agree there. All right. Thank you, everyone. Thank you for participating in this session. Thank you for taking your time. I know for the early blokes and the early individuals. Hope you've had your coffee by now. And then, of course, thank you to the Cleanverse team for being here as well and sharing your insights and your tools of the trade. In all fairness, it really sounds very, very interesting and very much worth diving deeper into. And I wish you guys all the success. So I think we'll call it there. Any other closing questions? Any other closing comments? Sandeep, for sure, go for it.
Yeah, I just wanted to thank you, Warren, for moderating and running this session seamlessly. So a quick clap for you.
Thank you. Thanks, guys. I'll pay you later. I'm kidding.
I don't know. Like this, I think. I don't know about
No, listen, thank you for being here, and thank you for allowing us to test a new system as well. That's also great. I think we've learned some new interesting ways to do things, so that's appreciated. And have a great weekend. Thank you for your time. We'll chat in the chats again, and then we'll take it from there.
Yeah,
Thank
and
you, everyone.
great thanks to Yaliwei as
Yeah.
well, yeah, and with the UABA team as well, and of course to you, Warren.
Very much.
Thank you, everyone.
Very much. Keep well.
Cheers.
Cheers.
Thank you, everyone. It was
Thanks,
very insightful.
everybody.
Thank you. Bye-bye.
Cheers. Bye.
Bye.